Gold has always been the center of attention for traders and investors, but right now, the weekly chart is showing a situation where a big move could be coming soon. We are standing at a point where the market is building pressure, and once this pressure is released, gold can either break higher towards new highs or fall sharply into a correction phase. If you are a trader, this is the perfect time to pay attention because the levels we are about to discuss are not just numbers on a chart. They are the key zones that can define the next trend for weeks to come. Stay with me till the end of this analysis because I'm going to explain each and every detail visible on this weekly chart and show you what these levels mean for your trading strategy. Gold is currently trading around 3,340 on the weekly chart, and this price action is unfolding between two highly critical zones that can determine the next big move in the market. If we closely analyze the structure, we can see that the price has been consolidating for the past several weeks after a strong bullish rally earlier this year. This period of sideways movement shows that both buyers and sellers are waiting for a clear breakout. The level of 3,448 is acting as a strong resistance zone. Every time gold has attempted to push higher, sellers have stepped in around this region, which is evident from the long upper wicks and the rejection candles near this level. This resistance is not just psychological, but also technical, as multiple weekly candles have failed to close above this level, making it a critical barrier for buyers. On the opposite side, 3,122 is serving as a strong support zone. Whenever the price has dipped towards this area, buyers have shown strong interest, resulting in long lower wicks and bullish reversals from these levels. This indicates that the market still respects this support zone, and as long as the price stays above 3,122, the medium-term bullish outlook remains valid. The overall structure suggests that gold is currently trapped between 3,122 and 3,448, and a breakout of this range will define the upcoming trend. A strong breakout and close above 3,448 will likely push gold towards the psychological level of 3,500 and even beyond, as the bullish trend will regain momentum. On the other hand, if 3,122 fails to hold and the price breaks below this level, we could see a deeper correction towards 3,000 or even lower zones. The candle formations in this chart also show reduced momentum in the past few weeks. The small body candles and alternating red and green patterns signify market indecision. This kind of price action often leads to a sharp breakout, as the market is building pressure within this range. Traders should closely monitor the weekly closing prices near these key zones, because a decisive candle close above resistance or below support will act as a strong signal for the next directional move. Gold is known for sharp moves once it breaks out of consolidation, and this current weekly setup is preparing for such a move. Gold daily chart is currently showing a mix of higher highs, HH, higher lows, HL, and lower highs, LH, which reflects a phase of market indecision but with clear reaction zones where buyers and sellers are actively participating. The price is currently trading around 3,340, which is between the short-term resistance near 3,453 and support zones around 3,240 to 3,280. The most recent move shows that gold attempted to rally but failed to break above the 3,453 resistance zone marked by previous highs, and the presence of multiple lower highs, LH, suggests that sellers are creating pressure on every upward attempt. The red dotted line around 3,360 highlights a near-term resistance level, which, if broken, could again push the price toward the major resistance zone of 3,450 to 3,460. On the downside, we can see that the green dotted line around 3,280 and the highlighted purple support zone near 3,240 are critical areas where buyers have previously stepped in. This area is important because it has acted as a demand zone multiple times, as seen by the formation of higher lows, HL, after each test. If the price closes below 3,280, there is a higher chance that the market could retest the bigger support zone near 3,122, which aligns with the key level on the weekly chart. The chart is also showing alternating HH and LH patterns, which indicate a possible formation of a range or a distribution phase before a breakout. For traders, the key strategy would be to watch for a breakout above 3,453 for a bullish continuation towards 3,500, or a breakdown below 3,280 for a deeper correction. Right now, the price is trading in a no-trade zone between these levels, and waiting for a clear direction is a safer approach. Gold's H4 chart is showing a very dynamic structure, where the price is continuously creating a series of higher highs, HH, and higher lows, HL. But we can also see strong lower highs, LH, and lower lows, LL, in between, reflecting short-term swings and profit-taking phases. At present, the price is trading around 3,339, which is positioned slightly below the mid-range levels after failing to hold above 3,451, the major resistance level seen at the top of this chart. This zone of 3,451 to 3,453 is a key supply area where sellers have consistently taken control, as shown by multiple rejections and LH formations near this level. Looking at the price action in the mid-range, the chart highlights a lot of consolidation phases where the price has oscillated between 3,325 and 3,325, 3,375, with several HH and HL signals. This range is a battleground where buyers and sellers are testing strength. The presence of higher lows near 3,300 to 3,310 and multiple green signals show that buyers are still defending these levels. However, the recent pullback from the top resistance indicates that momentum is temporarily shifting back to sellers, and the market is searching for support before making its next significant move. If the price breaks below the 3,325 to 3,320 zone, the next critical demand zone lies around 3,270 to 3,250, highlighted by the purple rectangle. This area is significant because multiple LL and HL formations have previously reversed from here, proving it to be a strong liquidity zone. On the upside, to regain bullish momentum, gold must first break through 3,375 to 3,380, and only a sustained move above 3,451 will confirm a strong continuation towards 3,500. Until then, the market is likely to remain range-bound, with sharp intraday moves between these key levels. In conclusion, the H4 chart shows that gold is currently in a short-term correction phase, but still holds a bullish bias as long as the price stays above the major support levels. Traders should closely watch the 3,325 support and 3,375 resistance zones, as a breakout from these levels will likely decide the next directional move. If buyers manage to push the price above 3,451 again, we can expect a rally towards new highs. Conversely, a breakdown below 3,250 will signal that sellers have gained control and a deeper retracement might follow. After analysing this H4 chart of gold, it's clear that the market is preparing for a big move. The best strategy for you right now is to watch these support and resistance zones closely and wait for a clean breakout before making any trading decisions. If you want more detailed analysis and powerful trading strategies like this, make sure to subscribe to Financial Freedom FX so you don't miss any updates. Also, hit the bell icon to get notified instantly whenever a new video is uploaded. If you found this analysis helpful, give this video a like and let me know in the comments which currency pair or commodity you want me to analyse next. Your feedback really helps in creating the content you need.